All right, and I think we are live now. I'm going to go ahead, copy this link, and I'll tweet it back out.
Okay, put it in the chat too of the thing, and I'll tweet it too. Yeah.
Okay.
I'll put it in the chat too here.
All right. Tweeted that out from the Good Soil account. Let's see.
Okay, I think we're live, and people should be joining shortly.
Yeah, it looks like we've got 7 on now, I can see. So I think we can maybe just give it a couple minutes, but maybe we could start with a kind of high level overview, starting with Tesla. This obviously won't be news to everybody, but maybe while folks are streaming in, we can start talking about the delivery numbers that came in on Friday. So right around 500,000, which I think was largely in line with at least my expectations, and a lot of the analyst numbers I saw out there. What was your kind of takeaway when you saw that come through?
The 200,000. Yeah, I thought 200,000 was kind of spot on where I kind of estimated. I thought it was most likely going to be between 190 and 210, based on all the experts. I know the accountant guy who's very smart, I cannot underscore enough, he came in at like 216,000 with his estimate. I couldn't figure out why he was an outlier and so aggressively bullish.
James Stevenson, right?
Yeah, he's a super smart guy, but I couldn't understand where he was getting the 216,000 from. So I thought, I was hoping I was wrong, or that all the other people were wrong and that he was right. But no, most people had between like 195 and 205, or a couple. You have to discount. There's a lot of bullish people in the Tesla community that we just are automatically biased to expect overly positive things. So I've been around every quarter. I feel like there's just people that are the most bullish and long Tesla. Oftentimes we're blinded by our own bullishness, and we somehow expect 220,000. No, it's going to be 230,000. Blow it out of the water. Like crazy numbers.
It's funny. So I used to do really detailed forecasts of Tesla's deliveries, mostly because like in a year ago, all the analysts were basically doing it wrong. So I'd look at production capability and assume some sort of ramp up, but I found after 3 or 4 quarters of doing that I had this bias that you're talking about, where I tended to assume there would be a greater deliveries number than Tesla ended up actually reporting. So last quarter, I actually stopped doing that. I just said Troy Tesla is better at this than I'll ever be. So it took his numbers for as they were, and then lo and behold, Tesla finally blew them out of the water. Kind of the way I'd always been expecting them to, up until I stopped doing forecasting. So I think after that kind of surprise in Q1, maybe there's a temptation among some of the folks who are doing this to assume that a more aggressive ramp rate would have pushed Q2 significantly higher than we saw in Q1, but there was a lot of downtime, I think, and obviously S and X were still down, so very small volumes coming out of there. But yeah, you're right though. There certainly is that tendency, especially if you're an enthusiast, to kind of latch on to the more aggressive numbers, and that's something I really try to actively guard against, especially when I'm coming up with like EPS figures and that sort of thing.
Yeah, and it's funny. There's some bears out there, whether it's like Gordon Johnson or others, that are like, yeah, they're going to do like 210,000 this quarter, but then they're like they're like really trying to set themselves up to be like, hey, we were right. It was under 210,000.
Yeah,
It's
or
funny.
Tesla missed because I thought they were going to do 250 and they only did 210.
Yeah, European demand is done with. I think that guy Gordon Johnson was saying like quarters ago. Yet this quarter was like a
Yeah.
record for Europe again. It was funny.
Right.
So
It's, they keep throwing out this term, Tesla's a busted growth story, but, then they'll,
yeah,
if you look at their forecast that they publish, Gordon Johnson publishes his forward forecast, and he's assuming,
yeah,
pretty significant top line growth, but, yet assuming it's still like a $20-$30 stock. It's pretty amazing.
yeah, yeah. Well, we also, I mean, those bears, as much as they like ruffle our feathers and we're like, these guys are so wrong, I've also learned to be thankful for them too, because it's allowed many of us to get in at kind of prices of Tesla that are discounted because of their narratives that catch some people's attention that otherwise would be buying Tesla too. Mm-hmm. So if these bear people, whether it's Chanos or Gordon Johnson or Mark Spitznagel or like Spiegel or whatever.
Spitznagel. I like Spitznagel better than Spiegel.
Yeah. No, there's a famous like options trader with that name I'm confusing with. But other than if those bears didn't exist, then Tesla might already be a 1 trillion market cap company. And we'd all be on the same side already. But because the bears exist so much, it gives us all kind of an opportunity to get in at a better price, so it's something to be grateful for in a way too.
Yeah, absolutely. That kind of gets me thinking a little bit about kind of the difference between you and I and our relative Tesla histories. I mean, you've been a Tesla bull for basically since the beginning, whereas I kind of loved the company. But with my valuation background, I just hated the price of it, up until around 2017, 2018. And around that time, I was really sensing this tension of, Tesla was around $50 billion, and it seemed like a kind of a compromise between the bear case and the bull case, but it was untenable ground there. At least that's how I saw it around, 2019 in particular, when the company really started to pivot. Elon had been talking about how their manufacturing processes would be best in class, yet quarter after quarter they had these really bad margins, really low output, and so I was I would say tentatively in on Tesla up until they kind of proved that bull thesis wrong that bear thesis wrong by really kind of aggressively growing those Model 3 deliveries and showing the margins in Q3 of 2019 in particular. It was like, okay, very clear to me, the bear case is wrong. So there should be this kind of upshift to, the bull case, which of course then did happen. But what was your, how were you confident so many years before Tesla actually executed that, they were on the right side and they kind of would sort out all those really serious problems that they ended up incurring?
Yeah, I mean, I thought that you can kind of see the FUD, the fear, unrest, and doubt, in real time when you're an owner of the product, So I was one of the early owners of a Model S, and I was reading testimonials nonstop of anyone who drove it or owned a Tesla. I went to as many of the events as I could, went to see the car. I was on the forums, looking for real testimonials, not journalistic reports of the car, because that's like it's like early days of citizen journalism. Think of it as like I wanted to get a real experience of what the product was and how much people liked it. And from my measurement, it was like off the walls, like iPhone moment, but for cars, Yeah. And the news reports did not do that justice at all. It was just like a fire, Tesla, anything with those two words in the headline was getting like tons of clicks, and you just knew it was so wrong. Yeah. But it was like, in the end, something was telling me like the product always wins out. As long as they can produce it profitably, then the product will always win out. And when I thought about that, I realized Tesla, has the best product. No one's close. Even in 2012, no one was even close to having like a really cool electric car back then. And even if they could not produce it profitably for a little while, like they had the ability to raise money over and over and over again. Like, so as much as people wanted to say, oh, they're close to bankruptcy, and they sort of flirted on the line of that for a little while, like, staying just barely above water, but they would raise capital anytime they needed to. And so they didn't have a problem doing that. And I just thought they could always tap the markets for more cap. I mean, Elon had all these friends in Silicon Valley.
That's one thing I think was a huge flaw in the bear case, was just kind of assuming that if that cash burn got bad enough, that Tesla would go bankrupt. I mean, Elon had that famous comment that they were, what was it, 2 weeks or a month or so away from running out of cash in 2019, which would have been bad. But Kathy Wood has said many times she would have stepped right up and infused as much as possible to get. And you think about the price she would have gotten in at had that come to pass. I mean, that would have been a great investment. And there's no shortage of others who would have stepped in to kind of help bridge that gap. But Absolutely. I do think that that kind of mentality of that Elon crafted of, we're not taking outside capital right now. We're going to solve this problem just with engineering and just grit. I think that there's something to that. Putting up that tent is not the sort of thing you can do if you have a founder who comes in and says, oh yeah, it looks like we really do need 6 more months, so we'll raise a couple more billion and we'll get back to redesigning the assembly line. And I think that's how you get into more serious kind of cultural issues that are much more of an issue.
And I remember back in it might have been 2014 or something, when he first brought up the self-driving cars thing, and that they're gonna, originally self-driving cars was not even a consideration of my investment or just interest in Tesla, and then when that became a thing, when he started publicly on Twitter saying they're hiring self-driving, roles or whatever, self-driving car roles, that was a whole new dimension that took a little while to grapple with and figure out, okay, what's the value in this? And then I experienced the autopilot itself in 2015, and I was like, wow, this is really different than cruise control, and it just felt special, and you knew there was something there. And
that's where I started getting really comfortable with the valuation when I kind of I like doing models and that sort of thing. And I got to a point where, I was really comfortable that the company was, at least 3 to 4x undervalued back in the, 2019 when it was around $50 billion, just based on kind of the hardware sales and the margins that they could expect once you kind of normalized for a lot of the one-time charges that they saw in the first half of the year. And then you saw, okay, if they can actually hit 500,000 vehicles in 2020, and then, maybe 750 or 1 million in 2021, and you start, looking at forward multiples, based on a 25% automotive gross margin on those numbers, and kind of just a moderately growing operating income. I was doing these valuation multiples saying, okay, the stock conservatively should, triple in the next 2-3 years. And then on top of that, autonomy is this, I always thought of it as a call option, because it's
that's what I thought of it as.
I don't know if they're going to solve this. I'm not really smart enough to figure that out. I've since dug into it a lot more. But if it's possible, then the math I was doing at the time was that's $3,000 of extra pre-split, $3,000 per share of incremental value if they can solve that. When I started putting the math together like that, I was just like, this is a no-brainer to go, all in on. But it took me a while to get there, admittedly. And I think we're in a similar space now. So with the numbers over, on Friday, there was, I think on Thursday it had closed around, 675, somewhere around there, spiked up almost to 700, I think, on Friday morning, and has just been essentially falling since then. What do you kind of make of the market's reaction to delivery news?
I mean, I think there's just some profit take. It's building a stronger base, in these 600s, hopefully. I think there's a really good setup for the next 6 to 18 months, with the new factories coming online, strong deliveries for the rest of this year and next year. So just from a strictly, production point of view is a really good setup. And then you add in, like we were talking about, the call option of autonomy, robo-taxi possibilities being thrown in there in the next, whether it's 2 weeks or 2 years. Hopefully it's much sooner than 2 years, but it's probably more than 2 weeks. The joke is now, but whenever that subscription button gets floated out, I think within a quarter or 2 quarters of the kind of the consequences showing up on the income statements and such, an analyst catching on, and sooner or later the cognitive dissonance of the Wall Street will kind of realize, hey, we've been wrong about Tesla. This is an enigma. This is a once in a generation company here. Everyone should have a piece of it. That's what I think. It's so many. There's so many. It's so tricky because Teslas are car. People say car. Oh, it looks like another car. What's the difference? It's all electric, cool. But it's so much different. So much more than just. It's like It's kind of like. It looks like a car, but it's a computer on wheels powered by something completely different, and it's upgradable. It's just like a robot. It's like all these things more than a car, but it's like a Trojan horse of just a car, but it's so much more. It's really it's going to be amazing the next couple of years.
It really is. I mean, I think about, I bought a Model Y in January, and what is the base price? Around 45,000, I think. So, they presumably got somewhere around a 20% margin on that. But then, I also bought FSD and the acceleration boost. So I've got, $12,000 of, pure margin upgrades that I opted for. And right now, the best math that I've been doing is that only around 16% of people are opting for FSD at the time of purchase. Wow. So I just view that as just such a huge potential. I mean, when the subscription comes, presumably that would go up, I would imagine, at least to like 25% or so. Now, it won't be all one time, so the income statement impact will be a little bit more muted. It'll be kind of cumulative over time, but still, it's going to have profound results to the earnings in the margins over time that I think most analysts are just completely ignoring. It's like I'm just wondering, how long is it going to take them to kind of realize, oh, they've got this absurd feature, and all of a sudden all the customers want it. Maybe take rate gets to 35%, 40%, if it's really good. And thinking about what that does, I mean, like 40% gross margin. Can you imagine that they start posting that and the implications to earnings and multiples? And I mean, there's just so much upside here. It's kind of crazy. Yeah, but the timing of it is hard to predict.
I know, and I think they'll announce a factory in India soon, and maybe another one in China, or just a doubling of current one in China or something. So there's going to be a lot of plans, I think, released for further expansion. And one thing people ask a lot of us, particularly me, is like, it's a good time for a call option. We're really pumping up Tesla, obviously, but it's our highest conviction name, and we feel safest in Tesla versus any other stock because it's backed up by its hardware sales and so forth. And the long-term call options, they could be profitable, but they might not be. It's hard to say. We're 600 billion, 700 billion market cap. That's what we're trading at right now. It's pretty rich for just a hardware company. I mean, we know it'll get there, but if the self-driving gets delayed indefinitely, or something happens with that, it's hard to say if Tesla's going to really appreciate to that like $1 trillion market cap anytime soon in the next couple of years, or next, so I think in order for it to get to like the trillion, in order to be a long-term call option buying, you have to really believe it's going to get over $1 trillion market cap, pretty soon, and it could happen, but I think you and I both talked about it, and as confident as we are that Tesla will eventually get past that, the next 1 or 2 years, it's sort of a gamble. It could happen, but it might not happen. So for that reason, it's tricky to get into a lot of call options versus just holding the stock. And we do a little bit of combination with our fund, obviously. It's tricky. Like if Tesla went down to $400 a share and it was a year from now, it's like, okay, and nothing else has really changed and they're growing still, then it's like, oh, that's a no-brainer to get into some long-term call options in my mind, But yeah, it's already pretty highly valuation, and long term it'll be much higher. But yeah,
I would agree. I think there's a good chance long-term call options could pay off, but it's not a slam dunk like it was, 18 months ago in my mind. I think the key unknown variables right now are like you said, timing of FSD, and then the other one I think is just how good is FSD. And it may be the sort of thing that takes longer to iterate and still, is quirky, kind of in the way that Smart Summon is quirky right now. And so maybe they need another, year or something like that to get to the point where it's actually really consistently impressive and therefore leading to higher take rates and therefore kind of impacting the financials and therefore, giving us confidence that, there could be the huge valuation kind of gap up that some people are expecting. So I agree that, there's a good probability, but it's by no means a certainty, I think in the short term or in the medium term, the next, 2-3 years.
Yeah, it's probability, like it's so unpredictable. I don't even want to put like in the past, I try to put probabilities on things, and like it's almost like to me like 50-50. Like, are we going to be $1 trillion plus market cap in a year or not? It's like 50-50 to me almost. It's like so much of a coin flip to me in a way. So it's something I'm not willing to wager a ton of our assets on that bet, versus if it was like priced in the market, if we looked at the probability lab on Interactive Brokers and the probability lab said like 10% chance of it being over $1,000 a share in a year, then I'd be like, all right, we should put something on this, but I think we looked at it recently and it's more like 20 to 30% chance. I don't remember exactly, but it's not 10%, I think so.
Right. So we're getting a couple questions coming in now. So
sure.
Maybe we can start trying to get through some of these. This one's probably more directed at you. Do you see any impact from the heat dome that is coming to California that looks like it'll break all records? What is the temperature? So I'm in Michigan. It's a balmy 90 degrees here, I think, today. But what's it like for you?
I think it's in the 80s today in Northern California. So every summer we get these heat domes, I guess, and the real worrisome thing is it going to spark fires, and then if there's fires, then we have like rolling blackouts, and that just has a cascade of issues. So if for us this is the norm for the last few years, and hopefully the fire season is better.
It's the sort of thing that you expect will happen, though. I mean, wildfires are kind of a fact of life now. I mean, is that a fair assessment?
I would say so. Just whether or not it's like expected or controlled to some degree. It's scary when they have these huge wildfires that are like out of control. Like, oh, we have it 2% contained, and we don't know when we'll have it. We don't know when we'll have it 20% contained or 50% contained. It takes forever, and it's just getting bigger and bigger, and smokier everywhere. And you get the sense of it being out of control, and people have to evacuate towns, and a town gets burnt down all of a sudden. It's just that's what's scary. So if they can keep it under some sense of control. That's a fact of life that wildfires happen and they can control it. That's probably the best we can hope for. Yeah.
This next one, what innovative products can Tesla come up with? Would Starlink somehow be linked to Tesla? I think there's what
do you think?
Host of potential innovative products that they could come up with. I mean, their vision-based AI system to me is the one that's so once they've established that infrastructure to really solve, driving, Elon was recently talking about all the variables that need to be, kind of addressed in order to solve this. And they have to have this huge Dojo supercomputer. They've got this, world-class AI team solving an unsolved problem. And the one thing that seems likely to me with that existing infrastructure, I think they could do, some sort of vision-based training AI as a service for the other automakers out there. But I'm not sure exactly how that would be structured. And then I think from there, what other problems can their AI team solve that would be, high margin, high impact to society? I don't know, but I know that it's, not nothing. So I don't know. What are your thoughts on kind of the skunk works within Tesla and some of the unforeseeable products that may be coming?
Yeah, Well, the skunk works within Tesla is the real call option. You know, it's
Yeah.
like the hidden call option no one seems to talk a whole lot about. But I heard George Hotz mention in an interview not long ago that Elon is the best marshal of resources of anyone out there. So like has the most resources in terms of engineering talent right now of any company. He's bringing in even more resources. This AI day is going to recruit like the top machine learning people. And it's going to be incredible what Elon is going to be able to produce with this level of resource in engineering. It's just that's the real call option. What's going to bring Tesla to be the biggest company in the world faster than anything else, in my opinion, is the skunk works that we don't even know about yet. And then the Starlink thing, I do think I've mentioned it with Dave Lee on his channel in one of our interviews. He's a little skeptical. I think that Starlink's going to be part of the cars for a long time, but I think within 5 years, I could see Starlink having an integral role in all the cars. First, the Cybertrucks, like very soon, maybe even the Cybertrucks. Like, you know, it just seems a no-brainer to put the Starlink in each Cybertruck. Like, why not? You know, like I see it. Like then you have the full stack vertically integrated, not just the manufacturer and the software, but you have the internet connection too. You don't have to rely on Verizon or AT&T. You know, you own it, and I think that's what Tesla would love.
Yeah, absolutely. I mean, right now they've got the premium connectivity at $9.99 a month, but I've seen some people say, "Oh, that's a huge, you know, margin for Tesla," but I think that it's mostly a pass-through cost. I would suspect. You know, it's not free connectivity, but with Starlink, that would really change the game. You know, where you've got the fixed costs essentially up there, and then everything from thereafter is almost entirely margin. So yeah, I'm really curious to see kind of how that matures over time. Next question came in was on Bloom Energy. So this was our first short as a fund. So you would ask me, you know, to kind of look at what a company might that might be a good short potentially within the energy space would be. So I spent a lot of time kind of looking through some companies. The problem I had when you first asked me that was I think the a lot of the things going on right now in the energy space are kind of like slow moving Titanic wrecks where you know I think that there's going to be a lot of bankruptcies in the 2030s and maybe even beyond as this very slow grid transition takes place to, you know, renewables and solar, and you're displacing a lot of the higher priced more fixed cost kind of generation like natural gas and coal. And coal's already kind of dying, but natural gas is going to take longer to die, and even nuclear, which is kind of on that borderline of, you know, some people love it, some people hate it. But Bloom Energy is one where I think it's just so drastically overrated right now. So for those who don't know, it's they essentially have this fuel cell technology where they take a natural gas input, they don't combust it, but they create electricity via the fuel cell. And it's incredibly expensive. But I was looking at it on $1 per kilowatt basis, which is kind of the industry standard way of assessing the upfront capital cost for a project or for a technology. And it's about 3 to 6 times more expensive than solar or wind, and even more expensive than just conventional natural gas generation. And on top of that, you've got, you know, higher variable costs because you're paying for fuel, unlike solar or wind, where there's no fuel cost. And then all of their projects come with this really expensive, it's called like a long-term service agreement within the industry. So you essentially guarantee payments to Bloom as a customer for them to come out and, you know, clean all of your fuel cells, all the moving parts out. And then they've got to dispose of all this kind of like toxic waste. So they build themselves as this green energy company. They were actually sued, I think it was by the California Department of Energy or someone like that, because they were just dumping this stuff in landfills without a permit. So, you know, just any way you cut it, from customer economics to, you know, their green credentials to just the ability of this technology to really, you know, grow over time. And then even their financial fundamentals, I just hate it. I mean, they're negative EBITDA, negative earnings, very small revenue base, and they're trading at around, you know, 5 or 6 times revenue. It's just it's a company that there's almost no redeeming qualities about. So it's one that I'm at least pretty confident is just drastically overvalued right now at current prices. But it's been volatile, so we'll see kind of how the market reacts over time.
Yeah. I had heard of Bloom Energy a long time ago. I remember on a 60 Minutes report, like maybe when it was first like coming out an IPO, and it was like, this is this promising new energy creation. And I remember the 60 Minutes report vaguely and like thinking, wow, this is pretty cool. I wonder if it takes off. And then I never really heard of it. And then I saw the Bloom Energy, stock, and I was like, oh, interesting. That's that 60. And then you were, you put your case, you gave me the case, and I was like, that makes sense. Let's definitely short this thing. Yeah.
Yeah, well, so I was familiar with them from like the early 2000s, I think, because they had this thing called a Bloom box, and they were just convinced that it was going to
Yeah, that
be
was the Bloom box. Yeah.
the Bloom box. Yeah, it's every American home is going to have a Bloom box,
Yeah,
and so it was
that
like,
was the report I saw many years ago. Yeah.
yeah, and it was like this sort of thing that was going to be the next big thing forever, and
Yeah.
eventually it was like 2012, and I was like, whatever happened to the Bloom box? It was like, oh,
Yeah.
nothing. Then like all of a sudden, like 5 years later, Bloom IPOs, and I was like, wait, what? They're still around? Just it made no sense. So they've pivoted. They're focusing on C&I, commercial and industrial customers now, which I think was probably a good move for them. But even then, there's just not the sort of market where they can really grow and advance. So yeah, I think that's a great short that I'm excited to keep an eye on. And we dipped our toe in it earlier. Had a good result, and then once it kind of rebounded, we went short again. So I'm kind of curious to see what happens over the next 6 to 12 months with Bloom.
I see a guy, Marty Party 03, said the bloom is off that rose. It's a fitting comment he just put on the chat.
That's funny.
Anyway.
All right, we probably need to get through some of these comments a little bit more quickly. I think almost everything positive about Tesla is priced in the stock price. I think we kind of addressed that already. With the hardware is probably mostly priced in. I think I made the case a while ago that I think it's around $850 for just the hardware. Then you got just the FSD software as another piece on top of that, and then kind of autonomy as a service, robotaxis is a lot more on top, of that. So
yeah, and then the skunk works. And then the skunk
works. Yeah. And then energy. We haven't even talked about energy.
Yeah, energy. That's big too. Yeah, I mean, in the long run, Tesla's going to be it's going to be the biggest company in the world by the end of the decade. I keep saying, but it'll probably be much sooner than that, actually. But worst case in my mind is end of the decade, biggest company in the world. And that means like 3 trillion plus market cap in my mind by the end of the decade. But that's like worst case in my opinion. But I think there's so many things that'll bring it there faster. It just, we'll see.
Yeah. I completely agree with you. I think they'll get there. It's a matter of when and kind of how do the chips fall in the next couple of years. Yeah. So opinion about long calls. I think we already talked about that a little bit. How about just general view of the market in the next 6 months and then 1 to 2 years? Please share insights that are just invisible to us small retail investors.
Hey, Matt and I are both small retail investors at heart too. Like, we've been fortunate to get on the Tesla bandwagon when we did and make some profitable decisions for ourselves. But we are absolutely small retail investors. That's our, I think you just have to kind of do your own due diligence on this stuff and talk to other small investors. And you have to be skeptical of all the institutional research out there, obviously. And it just seems, Matt and I have talked about it, that, it's after such a run up, such a V-shaped recovery from the COVID crash, that there is bound to be some kind of sideways trading action for a while on the growth stocks. And we're either in the midst of that or towards the end of it. It's hard to know. If we're in the midst of it, the growth stocks particularly could be sideways for some time to come still, before the winners really prove out to get out of this range. That's kind of our view. So buying, call options, while it was profitable a year ago from, exactly a year ago, basically, it's not something we are really doing aggressively now. I don't know. What's your thought, Matt?
Yeah, I would agree. And we've talked, I think when I first joined Good Soil, we kind of intended to start selling covered calls because, there was just not necessarily a near-term catalyst that would, drive it up. And the pricing on those was just a bit low, though. I mean, we've seen implied volatility on kind of the weekly Tesla calls fall quite a bit over the last 6 months or so. But we found a couple other securities where we've started selling calls and puts on securities where we want to kind of enter a bit more aggressively. And I think that's been a strategy that's worked pretty well for us so far, is, finding high implied volatility securities, and selling calls and puts within those. So I think that's something that's working well for us right now, and probably something we'll continue to do. Within kind of strict exposure limits, but we'll continue doing that as long as the implied volatility kind of stays where it is.
Yeah, I mean, one thing, there's not one thing I guess we could mention, since we mentioned on the Interactive Brokers Cap Intro webinar last week, and it'll be in our investor letter, is our fund can't hold cryptocurrency directly, but MicroStrategy is sort of a proxy for Bitcoin that and there's other proxy stocks like Riot and others out there, but we don't think that Bitcoin, we think it's kind of here to stay. We just don't know if we think it's sort of range bound maybe for a while. And so the volatility of Bitcoin is high, and then MicroStrategy is sort of a proxy or a derivative of Bitcoin. And then if you look at the derivatives of the derivative, so the options in MicroStrategy, those are very expensive. And so we've been doing kind of a strategy selling some of that. It's been doing well, kind of a unique thing. But that's a little more advanced, and I'm not sure it's for everyone. Basically, it's just something we've been flirting with, and it's, selling options, it seems an attractive time to sell options in general for a lot of things right now.
Yeah, and I always try to urge caution. I think people can kind of hear your story and say, oh, I've got to go, hard into options, and I'll make 500x and retire at 25. We're not doing that right now with the market the way it is. The time to kind of buy out of the money calls was 18 months ago, and so there's a high probability with any derivatives that they'll kind of go to zero. So I think if you're just a normal retail investor and you don't have a massive risk appetite, hold Tesla equity. I mean, that's a great option for you right now. So I would only kind of get into these if you really understand them, or only with a very small percentage of your capital.
Yeah, absolutely. Yeah.
So when FSD comes out, will Tesla gap up overnight, or will the market realize it slowly? I think we talked on that a little bit as well.
Yeah.
I think it kind of depends on how it looks when it comes out, and whether it's,
even if it looks great, it reminds me of 2013 when the Model S finally got delivered, or it was the end of 2012, then into 2013, I think, or end of 2013 to 2014. I can't remember exact which year, but I remember, at that time, Tesla was like a 4 or 5 billion market cap stock, and I had all these call options like, oh, the Model S is going to be great. I test drove it, and they started delivering it, and then Motor Trend gave it the Car of the Year award in like that November going into the end of the year, and the Tesla stock still, even though it was like already being delivered to hundreds of people and the best car ever, like the unthinkable was being done, the Tesla stock was still like in like a $4 billion market cap range. It didn't break out of that. It was still like dumbfounding me. I was like, what? Why is Tesla still $30? It should be like $50 or $100 now. Like they just did the impossible, And it wasn't until like 3 or 6 months later, when it started showing up on the quarterly reports as being profitable for the first time ever, or something like that, that all the shorts kind of capitulated, new buyers came in. It was like a whole new realm of investors got introduced to Tesla to bring the stock. It got re-rated or whatever to be $100 plus. So it was a delayed reaction. So full self-driving, it's possible the same thing happens, that, this incredible technology is introduced, and we're all like, wow, this is changing the lives of everyone. And Tesla's still at a 600 or 700 billion market cap valuation. But then 6 months later or a year later, after it shows up on the income statement for a few quarters, and everyone catches on and re-rates the stock to be like a 2 trillion market cap company, then so the full self-driving, it might come out and that would be great, but just be careful not to be let down if the stock doesn't react for a while after that. That's what all I'm saying. Like, don't I wouldn't say, oh, I guess it's not going to happen, and close your position and forget about it, because then you're missing the boat probably for later.
Yeah. What options, books, or courses would you recommend? I actually have one right here. I was just pulling out some of my old reading materials a while ago. I happen to have this one right here. So this is one I read, Real Options by Tom Copeland and Vladimir Antikarov. This is not really about publicly traded options for the most part. It's really kind of like decision tree analysis and binary outcomes, and so I found that one really helpful personally. It's really technical, so there's a lot of math in there. There's a lot of work to kind of get through it. It's not an easy read, but I do think it kind of helps you to see the world in terms of real options rather than just, publicly traded options where you just buy it at a price. I think that the idea is really about changing your mindset to think about, like we were just saying, Tesla Skunk Works is a real option. It's not a publicly traded option. It's just thinking of the business as it has the potential to kind of go along binary paths, and this path is going to be worth $1 trillion and this path is worth 0. And so you got to be comfortable kind of building out decision trees and kind of thinking through what the value streams at each one of those would be. So that's one I'd recommend, but it's not fun to read.
Yeah, that's tough. I have an options book here. I never actually read, but I was given it to me from someone. I took the cover off. I don't know if you can read it there, but I actually never. I think I skimmed through some of it, but it's a little too complicated. I'm not a big reader of books, but I learned a lot watching some tutorials on Interactive Brokers website when I was working there and taking training courses with other employees and so forth. And when I was at UBS many years ago, and just knowing the basics. I mean, you can get really advanced, do some really advanced stuff with options, vol trading, and all this crazy stuff. But I like the idea of just understanding what a call option is by itself, understanding what a put option is by itself. And then I just kind of limit it to that. I don't want to do all these crazy spreads or synthetic longs, and you can do a lot of crazy stuff. And I think it's fun to go that direction, but you have to be careful.
And you pay a premium for each option that you buy. So I think layering in multiple options is like you've got to have a very unique view of what the short term in order to really make those profitable. And I think what's worked for you and I anyways is to take advantage of asymmetries in the long term, which is where you'd want like a naked call rather than, some sort of synthetic, collar or something like that.
Yeah.
So
and definitely I would definitely understand the Black-Scholes formula, just from a high level, at least what it is, watch a video on that. And
do the calculations.
That's how options are priced.
That's helpful.
Try to do it yourself. Yeah, if you could do it yourself, that's great. Exactly. And then it's then something like the Interactive Brokers Probability Lab. I love that because it simplifies a lot. It tells you kind of in simple terms what the options market is pricing in terms of probability percentages a stock will be at by a certain time. And if you disagree with it, you can decide for yourself, I think this will be worth this by this percentage chance it'll be worth this much by this time. This is way up. I'm going to buy call options, or I'm going to sell call options. I don't think it'll be worth that much, So to me, that's helpful too.
Yeah. Any other clean energy stocks? So I'm not long any other clean energy stocks. I've looked into a couple, like First Energy. They're more of like a manufacturer of solar cells. Kind of interesting, but I don't really like the financials right now. NextEra is probably the pure play clean energy company out there, but I don't like a lot of the longer term risks that I was kind of highlighting earlier. So I don't know. Those are kind of my thoughts. Nothing I'm passionate about though.
Yeah.
But Emmett, how about for you? Thoughts on Roblox at current valuation?
Yeah, Roblox, I'm a huge fan of. I think they have a real chance to get a huge slice of what this coming kind of metaverse thing is. It's a sort of a word that's thrown around a lot, like AI now, metaverse or whatever. But I think that's the direction society is going in, is kind of going into this virtual world where people, especially younger people, are spending more and more time with their friends, kind of socially in like a virtual world. And the instant gaming capability of Roblox makes it especially attractive. Like you have a Roblox account, you just press the button, you can instantly click on any number of experiences, hundreds of experiences, and there's hundreds of new experiences every day being created by hundreds of thousands of developers, just like an entire ecosystem, an entire platform for this capability. So as long as the developers continue to develop on Roblox, and it'll create, they're incentivized to create more and more content, better content, then it attracts more and more users, which then attracts more and more developers. It's just like a flywheel, like a critical feedback loop, viral loop that just, so I think there's a real potential. I mean, I could be wrong, but I think there's a real potential of Roblox is a 10x return within a few years of a stock. So I don't know what the probability is. I'm not going to put something on that now, but I think it's significant enough to pay close attention to. And so I'm very excited about the possibilities of Roblox, just because it's so big, and it's for developers.
It's the sort of thing that once you've got that flywheel, you can't really replicate it, right? Like I don't think there's going to be some Roblox competitor that's going to come in and get all the best developers and kind of break and steal their market, because you do need that platform. It's a platform. You got to somehow make the whole thing better and switch both customers and developers over, and that's just I just don't see that happening.
Yeah.
Wait list in the US is September for a Model Y. Any chance Tesla could ship Model Ys from China to US to help with demand? I personally don't see that happening.
I don't think so.
Yeah, I mean, I think China's going to focus on Europe. And this is what Tesla has normally done, though, is the first 2 months production will be for exports, and then they kind of have a shrinking net to Fremont is a phrase I liked once. I heard somebody say that, they just, as the quarter ends, they get deliveries closer and closer to the manufacturing hub. So I think China's starting to do that. Shanghai's starting to do that, and Fremont has always done that. But this is a short-term concern in my mind. It's not going to change the delivery numbers anyway, so it doesn't really matter. I think in my mind the much more important thing is getting Berlin and Austin up and running as soon as possible.
Yeah, absolutely.
So you have a Model S Plaid. Are you worried about the recent Plaid battery fire?
I'm keeping an eye on it just to see if I get like some kind of recall, just to maybe they have to add an extra thing on the battery or something to decrease the likelihood of some cells burning out or something. I'm not very concerned. I'm confident Tesla will do the right thing. They always have. If there is something for all the Plaids, it might have just been a few battery packs that could be slightly defective. But even with the Model S or the Model 3 or Model Y, 1 in X thousand cars has kind of a defective battery pack. And, it's much less degree of problem than I think gas cars, internal combustion engine cars, So, I'm not too worried. I think Tesla will do the right thing, whatever it is.
All right, next one. What's your guess on when the first Cybertruck will be delivered?
I think I wouldn't be surprised if it doesn't happen until next year. I mean, I think there's no need to push the Cybertruck when their hands are so full with Model Y production ramping up. I mean, it's just killer demand for the Model Y. They've been increasing prices and demand is still off the hook, So
that's been the really surprising thing. You keep having all these price increases and inventory is at all-time lows and wait times are at all-time highs. It's crazy.
Yeah.
I get the feeling they've got huge pricing pressure or pricing capability right now, and especially if that $10,000 tax credit comes through in the U.S. I mean, I just think that could be a huge potential, margin lever that they could pull.
Yeah, that credit will be amazing. I mean, that'll shore up demand for many years and high profit margins, and it's going to be. We'll see what happens with the infrastructure bill this fall, I guess.
Yeah. All right. Realistically, which do you think would help humanity most? Keeping a capital employed in profitable businesses that turn less resources into more, or charity? It's a bit of an apt question, I think, for good soil.
Yeah, no, I think it's a combination, and I think we're doing what's our plan is to do a combination, and so I think we're investing in companies, whether it's Tesla or others that we think are good for humanity, as well as growing, the economic system incredibly, and then the foundation giving to charity. There's ways to give the charity. We're taking a percentage of half of our fees and put it into charity, and there's a way to give the charity that I think has exponential returns as well. So I think there's a combination. Certain needs cannot be met just by capitalism alone, but other needs cannot be met by charity alone either. So it's sort of both, I think. What do you think?
It's interesting. Yeah, I was thinking about the example of Warren Buffett lately, and he's done that pledge. I forget what it's called, but to give, what is it, 85% of the Giving Pledge. Yeah. but it's basically going to be once he dies.
Yeah.
um,
Yeah.
and I think he's got rationale. I mean, he's a very smart guy, and his rationale is I can compound it more by holding, this capital over decades and decades and decades, and then, in 2030 or whenever he either stops investing or is no more, then he'd be giving a huge sum of money that can make a huge impact all at once. There's a certain logic in that, but my wife and I, we do giving as well, and we try to kind of give what we can when we can, and I think there's something to that, both for you as the giver, but also for helping humanity where it is now, rather than just kind of saying that I'm going to be able to help my kids in 70 years.
Yeah.
I'd rather do a little bit kind of day by day, and kind of help all along the way. And I think that's, you can set an example, and it's not only about the cumulative sum of the dollars that you've donated. It's also, I think, about setting an example and living a life that, others would want to replicate, and kind of softening that harsh reputation that capitalism has right now.
Yeah. I think like delayed gratification is generally a good thing, except when it's delayed inevitably forever. Like right. you gotta give it away at some point, and maybe instead of all or nothing, you just do something like what we're doing, where you're giving away a piece at a time from now going forward, or a decent amount. You're balancing it, and then in the future there's more to give away too. But yeah, I mean, Warren Buffett, he has a huge pile of wealth, and all these others that have signed the giving pledge. But once they die, it's not like all their money is just going to give them to charity. Then it goes to some crazy estates that's designated for charity, which could go on for decades or generations.
Well, and it becomes then you've got agents that are extracting some of the value from. Like, not that they're malicious by any intent, but you've got, a lot of full-time people, at these large, like the Gates Foundation or whoever, that, are taking a nice salary off of that. And, then you got office expenses and all that sort of thing. And I think there's probably just more effective ways to give in real time that get kind of a multiple effect in society. Here's an interesting one. What's the second or third stock that's biggest in your portfolios?
I think we have like the highest delta exposure to Roblox, I would say, after Tesla, right? And in my personal portfolio, it's like all Tesla basically. But in our fund, Roblox is our second, and then we're also still pretty strong on Lemonade, I think, and we still believe in that company. Medium, long term, short term, it's sort of hard to decipher, based on what the market prices the growth stock, an insure tech stock at, that we think will be inevitably profitable in the long run. But it's a $5 billion market cap or something now. It could be much bigger.
Lemonade's a really interesting one in my mind, because it's, people think of Tesla as a growth stock, but it's already profitable. It's a little bit more of a clear kind of trajectory of where they are, where they're going. You can apply multiples to it today. Lemonade, you really need to look at 2030 and beyond in order to get a good grasp on the valuation. We feel comfortable about that, but that also implies that if there's runaway inflation or other macro factors, it's much more prone to large swings than maybe some of the other less growth stocks out there. Yeah,
absolutely. Yeah. So you want to take one or two more questions, Matt, and we'll wrap it up? We should
probably wrap this up. Do you have any other? Do you want me to just keep choosing them, or is there a couple you want to?
Yeah, you pick them. Yeah, go ahead.
All right. Let's see. Any positions in safer but still great companies like Facebook, Google, Amazon?
I mean, I think Tesla is a safe company, like in that realm. We've been talking about that, but other than that, I don't know. I mean, we have a position in Square that we've had for a while. That's gone up quite a bit, but it's sort of becoming much more well established as a big, larger cap company now. I'm just looking at our portfolio. That's not really our fund's goal. Is not really to be in like the safer, bigger companies. We're looking for more aggressive growth stocks typically, and opportunities if there's a big company we think could appreciate a lot, maybe we'd buy options in it, for example, not just the stock. I don't know. What do you think?
Yeah,
Matt?
but generally speaking, at least for the Accelerated Opportunities Fund within Good Soil, you and I are always talking about, okay, can this 5x, can this 10x? And I think certainly with the, if you're just buying straight equity on, Microsoft or Amazon, I don't think that kind of meets our criteria. So, I don't have any problem with those stocks. I think they'll do great in the long run. But I think given kind of our mandate and the types of investments we try to go after, our view is people can put those in their own personal portfolio and maybe they should, but that's not, we're looking at a much different subset of investment types here.
Yeah.
Maybe last question, have you modeled into your future valuation what 4680s will mean to margin and rate of scale of auto hardware part of business? That's, I probably do more of the hard modeling than you do, Emmett, but at least for my part, I've gone down, the path of trying to do really detailed valuation models. But I think where I am right now anyways, is it's very hard to get answers each quarter to, were you right on what was the margin of the Model Y versus the Model 3? Because Tesla just lumps it all together, so you can't really see. So in projecting forward, a couple of years where you've got, Cybertruck and 4680s and, Berlin and all these different things, what I've tried to do is to look at I've honed in on the hardware gross margin, excluding full self-driving. So full self-driving is a software option. I value that completely separately, but I try to model, what's the actual manufacturing on the hardware or the margin on the manufacturing of the vehicles. And so I project that forward, and I have it. I believe I have it as stopping right around 25% or so, and the reason being that Tesla could probably continue to just, march that up to 30%, 35%. But if you're assuming really explosive growth in vehicle volumes and 50% compound growth every single year, the only way to do that is to lower prices. So you kind of have to balance lowering prices, which will of course put pressure on your margins, with kind of improving manufacturing technologies. So I'm essentially assuming that some good portion of these manufacturing improvements and these scale improvements will just pay off in the terms of lower prices that can therefore get to greater market share. That's kind of how I think about it and how I model it. But
that makes sense.
All right. Well,
so
thanks.
Yeah. Hopefully we'll do this every week, right? I mean, that's our plan, is to try to do like a live stream, a 30 to 60-minute live stream every week. Maybe we can try to do it like every Tuesday or something at the same time. We'll figure out a day and time, but hopefully we'll make this a regular occurrence for anyone who's watching and interested to follow.
Yeah, I think you and I have been having these conversations for a while now, and it might be good just to open it up to the broader public. So yeah, we'll kind of see how this evolves. Maybe we'll get some guests on here at some point, but we'll start doing this a little bit more regularly. And thanks, and feel free to put some comments in there, what you liked, what you didn't like, things you'd like to see. We'll read through those and appreciate all the feedback. But I think that's it for now. Thanks, everyone.
Thanks.